You're listening to the Option Alpha podcast from OptionAlpha.com, where we show you how to make smarter trades, learn how the stock market really works, and generate consistent monthly income. Now, your host and head trader at OptionAlpha.com, Kirk Duplessis.
Hey everyone, this is Kirk here again from Option Alpha, working every single week to make this the most popular investing podcast offered online and in iTunes because it's based on one thing and one thing only, and that's helping you guys make smarter trades. So again, thank you so much for tuning in today. On today's show, we are going to be going through what I believe are some of the key foundational elements to managing your money and generating wealth the right way. And I gotta be honest with you, like right up front, I am super nervous about tackling this subject because not that I don't know enough about it, but I feel like I have so much to say on this subject that I might not actually get to all of it, or I know I'm gonna miss stuff in this podcast that I'll come back and revisit later on. So I probably have a sneaking suspicion that I'm going to talk about stuff that I, either didn't want to harp on too much or miss a topic completely or a thought process completely. And we'll have to fill in the gaps at some point with another podcast, kind of like version 2 of this in the future. But I thought, we got to 150 shows on the weekly podcast, which is wonderful. And I wanted to take a step back and talk about, just kind of managing your money at a high level, generating wealth, and doing it all in the most appropriate way. Because I feel like people are still missing some of these really key kind of tackling and blocking elements, right? Like the fundamentals of what you should be doing. And so I want to present again, like what I said, my approach and how I kind of think about it, the buckets or tranches, when I think about saving and investing and generating wealth and how that kind of comes to fruition. So as always, if you guys have any comments or want to share what you think about the show, please head on over to optionalpha.com/show150. Again, that's just the number 150. And of course, because this is our 150th show, if you have loved the podcast, please take 2 minutes, leave us a review and a rating on iTunes or wherever you listen to the show. That would absolutely help us out. All right, so let's get into it. So here's the thing. I think there's a couple things that you have to do first as we start talking about this whole process of managing your money, generating wealth. I think there's a couple things you have to do first. So to me, I visually think about this. I've never drawn this out necessarily, but I think about it as a pyramid, very similar to like a pyramid for, food that you used to see back in school, right? So you'd have like your grains and your fruits, and right at the top was like the candy, it was like the sweet stuff. And so I think about this visually in the pyramid shape when I think about generating wealth and managing my money. And the bottom rung of this stuff is probably the most boring stuff, but actually has no doubt the biggest impact. And I would say that in all sincerity, because if you actually think about these couple topics I'm going to talk about right now, these couple topics have massive impact on your ability to not only sustain your level of income and wealth, but also to compound and grow it over time. And so if you really take a step back and think about these areas, there's probably something that you can do to optimize your structure or where you are and how you can improve your overall, I would say like your overall portfolio or your overall net worth. So if you do these 3 things or kind of tackle these 3 things, I think they make the biggest impact. And then as we keep going up, it just progressively becomes not less and less important, but you have to do these things first. And I would always start, like if I was a financial planner, which I'm not, and I'm not an advisor or anything and stuff, but if I was, this is where I would start with people. I would start with these building blocks. So the first 3 elements here to me are taxes, fees or expenses, whatever you want to call them, but taxes, fees, and then COLA. And COLA is what people often refer to as like the cost of living adjustment, but I just say like COLA, like the cost of living that you have wherever you live. So the first one here is taxes, right? Like the obvious choice here and the biggest investment partner that you have, whether you know it or not, is the government. And so how you are taxed and in what vehicle you choose to trade in has a massive impact on your performance, right? And so the first thing we have to do is try to optimize taxes as much as possible. Now, I don't want to go down any rabbit holes on today's podcast if I can try not to, and I will try to keep myself from going down these rabbit holes. But look, this is things like deciding to fully fund IRAs and Roth IRAs and 401ks and SEP IRAs. I mean, all that stuff. Like, get the hard stuff out of the way. Do the stuff that creates the biggest tax advantage first, and you can still trade options and IRAs and Roths and all of this stuff, right? So do that stuff first because that has the most impact on your success moving forward. The second piece to this is fees. People are eaten away at fees. Fees are the death of 1,000 cuts, right? What's the saying? The death of 1,000 small cuts. And that's what fees are. I've talked about this on the daily podcast a couple times, but fees are truly something that you don't feel necessarily, but you end up paying and start slowly eroding away at your wealth. And this could be anything from just reducing or trying to negotiate your trading commissions lower, making sure that whatever ETFs or mutual funds you're in, that's the most cost efficient way to do it. In fact, if you're probably in a mutual fund, I would probably even highly suggest that you consider getting out of it, right? Because they're so inefficient. But even fees on like credit cards, mortgage loans, auto loans, I mean, look, fees are everywhere. So do like a personal audit, figure out where you can save on all of these fees as much as possible. Because again, this is stuff that's within your control that could have a massive impact on your long-term wealth. If you can take, for example, let's say you're in a mutual fund that's a global performance mutual fund, tracks a benchmark of global securities. Well, you could probably replicate that mutual fund in a low cost or no cost ETF and save 1, 2, 2.5, 3% per year in fees. Now, that doesn't seem like a lot, but man, that adds up over a lifetime. So if you can save on fees, you're well ahead of the game. The next one, or the third element for this bottom section for me, is COLA, which just basically means you actually dictate and choose where you live in the country, what type of house you live in, the car you drive, all of the things that are associated with your cost of living. And whether you want to believe it or not, that has a huge impact on whether you can sustain your wealth or grow your wealth in the future. Now, some people would say, and I understand, well, I can't move because of X or I can't move because of Y, but that doesn't mean that you can't trade or flip or flop into a different part of town or a different type of housing or a different structure of housing that might save some money, right? So for example, we used to live in Virginia outside Washington, D.C. I've lived in New York. I've lived in D.C. Both of those places, insanely expensive. When we moved to Pennsylvania, we saved so much money on just the cost of living in Pennsylvania versus Virginia or DC or New York. So if you're in one of these high expense states, consider potentially moving. I'm just like, this is one aspect of it, right? But consider moving. And yes, you might go to an area where you have to accept lower pay, but if the taxes are better and the pay is lower, but the cost of living is lower, you might actually end up ahead. You might actually get a pay raise after everything is said and done because the costs are lower and, the state taxes are lower. Like, I'd love to move to a state that doesn't have state income tax, like, Florida or Texas or one of those, but I can't get my wife yet to convince her entire family to move there. So, but anyways, I would if I could, but I can't move my family for that, right? My wife's family is not moving, so we're not moving for that reason. But look, all the things that you can do to save money and cost of living are just very simple tweaks that you can do. And again, I'm a fan, I drive a minivan, we have a minivan and a truck, and those are our main vehicles, right? I don't have a Lamborghini, I don't have a Ferrari, I don't have any of that stuff, right? I prefer to live below my means on purpose so that I can save and invest the rest of what we have. And I think a lot of people could use some of that, and I'm sure there's something you can cut or maybe change or alter. All right, so now that we have that kind of basic fundamentals taken care of, which are basically taxes, fees, and then costs or expenses, you try to optimize those as much as possible. Now you move up to the second rung on the ladder for me, or the second level of the pyramid. So once you've done all that, then you can start doing these 4 things. And these are probably the most important 4 things you can do, and they go kind of in lockstep fashion, right? Which is, you have to first earn money, and that's not to be understated, but you've got to figure out a way to generate money, whether you have a job or not, or the earnings come from something else. But before you can do anything else, you have to earn money. So this is another area where you could actually earn money on the side. I mean, there's people who write articles, for money. You could be a freelancer for an hour or two at night and, generate some extra money on the side. So if your job is not covering it, if it's not enough, then start some sort of freelancing business. Figure out a way to sell some stuff around your house, right? Like generate some extra cash and extra capital. I mean, there's a lot of people who start businesses and end up earning money basically doing what they're already doing, right? So if you have a specialty or niche in your field and you're doing something really unique, start a business around it. I mean, heck, start a blog or a website. I mean, that's Option Alpha basically developed out of just me sharing what I was already doing. I was already trading. I might as well, if I was already journaling, I might as well journal about it online. And that's the roots, the original foundation of where Option Alpha kind of came out of. So the first thing is you've got to earn money or increase your earnings. Then and only then can you figure out a way to save money. And this one's a tough one. And I feel like maybe most people in America, probably not all Option Alpha listeners, but most people in America fall flat on their face at this level. Like this is 101 stuff. You can't become wealthy and rich and have what you want to have if you don't save more money than you spend. Like, it's just as simple as that. If you have a spending of $5,000 a month and you make $5,000 a month, you'll never get off the wheel. Like, you'll never get off the rat wheel of just continuously like spinning your wheels and going nowhere. So you have to save money by not spending as much. I don't know what other way to say it. There's blogs and podcasts on how you can save money and how you can cut your expenses. Ultimately, you either got to make more money or save more money or do a combination of the two to be able to have savings. Because then when you have savings, and only then when you have savings, can you then invest those savings. And again, I don't know why this is such a hard concept, but investment does not come from borrowing. Investment comes from saving at its core. You have to save something first to then be able to have excess to invest. So a lot of people still will look at borrowing on credit cards or borrowing loans or taking out personal loans. And while, yes, that creates cash, that's not true investment. That's not coming from a place of savings, of capital and excess reserves. So I like to think of it as, look, you still want to live below your means, save all the difference so that you can invest all the difference as much as humanly possible. And once you've invested, then the trick becomes the eighth wonder of the world, or whatever it is, ninth wonder of the world, which is compound interest and just compounding those investments over time. And look, it's not rocket science. And this is maybe the hardest part for me to get across in this podcast is I don't want to come off sounding too arrogant or anything like I know it all in this stuff, but this isn't rocket science. Like I geek out on finance. I study this stuff probably more than anybody else out there. I love this stuff. I live and breathe it. This is who I am. I love finance. And this is the simple formula. You earn, you save, you invest, you compound. And it's really as simple as that. So the tactics of how you do it, what you invest in, and what types of vehicles and how frequently you rebalance, those are all tactical elements. Those are things that are tertiary elements to just the core foundation, which is earn, save, invest, and then compound. Because as you compound, you start earning more, which means you can save more, which means you can invest more, and you compound more, and you earn more, save more, invest more, etc., right? But you've got to get to that level. And it starts with savings. It starts with having something excess available to then invest, and then being patient enough to let those investments ride. So the key one that I will tell you about here, and what I think is really cool, is that when me and my wife started investing, we knew that it wasn't all going to be options trading, right? And I'll talk about that here in a second, but we knew that we had to diversify out just a little bit. And so we started investing in real estate. But the amount of money that we started investing in real estate, we've allowed to self-compound on top of itself over time. So when we put in the initial money for a down payment on a small rental property, we took all of the rental income from that property and pooled it together to buy the next rental property. So did the additional money from rental property come from the initial investment? No. We put money in, we let that money compound and generate enough rental income to save up enough money over the course of another couple years, right? To then buy the next subsequent property, right? Almost like a snowball effect. It starts small, but then it gets bigger and bigger and bigger. And then we took those two properties now both generating positive cash flow. We saved up all the positive cash flow, did not spend it, right? We didn't need to spend it before. Why do we need to spend it now? It's just excess, dividends and income. We pooled all that money together and again, now bought the third property. And we've done this now multiple times to the point at which we now have 15 units. And so those 15 properties were all effectively started from one single investment that we have now just snowballed. So if you truly work the system and give yourself time to let these things compound, it's just a matter of just getting it kickstarted. Just like I think about the analogy of like kicking a snowball down the hill. Like if you can kick the snowball and just like get it started, get it rolling, it'll take care of itself. By the time it gets to the end, there's nothing that can stop it. You can't even run after it and chase it to stop it, right? Like you can't stop it because you've already set in motion this cascading set of events that would generate wealth for you. And that's the way I think about real estate. That's the way I think about options trading. Like options trading to me is just a compound thing. Like I know where it's going to be in the future. I know what my expected returns and my portfolio performance is going to be. So I just needed to kickstart it a long time ago. And I kickstarted it and now it just continues to go. And it's just going to continue to grow and grow and grow over time. So that's my thought process on that. But look, you got to get to those levels. You got to get to the saving level so you can invest and then compound. All right, so now that we've kind of covered this second rung on the ladder or second level on the pyramid, the next one, and I think probably a very important one, but obviously you got to take care of the other stuff first. But the next important thing for me are basically two things. And I think this would kind of encapsulate so many different concepts, but I'm trying to break it down into probably the two most important things I would think of being the paramount, like apex of this pyramid of this like wealth generation, net worth, whatever you want to call it, right? Like two things. The two things for me would be streams and diversity. So I think about them in two different avenues, streams and diversity, two different sections, I guess. Now you can tell, like I'm even like having trouble trying to explain my thoughts here because I'm trying to make it as simple as possible. But streams and diversity looks like this. You've got to have multiple streams of income or investments. So it's like, again, financing 101. Don't put all of your eggs into one basket. Spread your eggs across many baskets and watch all the baskets, right? So for me, that would be things like real estate, business, options trading, right? Any other thing that would come on top of that, right? Like you could do your business, your job, that could be one stream of income, your wife, significant other, spouse, husband, another stream of income, real estate, options trading, any dividend stocks you get, like whatever it is, like you've got to have multiple streams of income. And then within those multiple streams of income, and this is where I think it gets not necessarily complex, but I think I'll lose a lot of people here potentially. Within those multiple streams of income, you have to then diversify the portfolio of that particular stream of income. So what do I mean by this? So for example, we invest in real estate, and real estate is just an easy way to like explain this topic. We invest in real estate, but do we invest in the same type of real estate? No. We have student rentals, we have duplexes, we have single families, we have multifamily, we have mixed use commercial. We invest in REITs through my wife's 403B because they won't let me trade options. But right, we invest in multiple different sections, subsections, categories, sectors within real estate. So we don't just invest in real estate, we invest in real estate and then all the other little things within there. So that, like, for example, like our student rentals turn over every year. Like we have new students that come in every year and they leave and then new students come in. But that's not a very cyclical business because guess what? The university is not going anywhere. If we go through a market recession, the university is not going anywhere. Now, do I want to be in just that business? No, I want to be in other things too. So that's why we have, mixed use commercial, and we have duplexes and triplexes and multifamilies so that we have a diversity of income even within the real estate stream that we've created. Think about now options trading. So options trading is not just buying a bunch of call options or selling a bunch of call options. One of the things I harp on all the time is diversifying the stream of trading that we do. Different ticker symbols, different durations, different laddering positions into over time, right? So that we're not pigeonholed into one particular market at one particular time, at one particular event in, history. And that can be detrimental to you. So you diversify within that stream. So whatever the stream of income that you have, you diversify within that stream of income so that no one event, no one thing knocks you down. And that's really what it comes down to. So hopefully that really helps out. I know we've gone through this fairly quick. Like I said, I'm sure I'll miss some of the things, but to me, when I visually think about this, and I was like drawing it out as I was sketching out this podcast, this is how I think about wealth generation. Like everything else is, discussion topics, conversations you can have within a category, right? But at the core level, these are the things we have to take care of. And in my opinion, these are the priority we have to set to them. So taxes, fees, and cost of living, that's priority number one. Get those in place, then earn, save, invest, and compound. Great. Once you have enough to earn, save, and invest and compound, then you start diversifying into different streams and diversify within those streams of income so that you can create, in my opinion, what looks like a pretty sound, pretty stable overall kind of net worth and portfolio moving forward. So before I wrap it up, and again, you can get all this stuff, all the show notes over at optionalpha.com/show 150. Again, that's just the number 150. Before I wrap it up, I want to talk about a couple tools that I personally use. There's actually not too many. I mean, I'm sure there's a bunch of tools out there. I'd love to hear what you use as potential tools or things that help you save money or that you use. I'm sure I'm not going to go over all of them, but the ones that kind of like stand out to me, obviously Option Alpha, because we use that for trading, and our brokerage account at TD Ameritrade and Thinkorswim. That's number one for me because that's where most of it is. The other tools that we use are Mint. I love Mint. Mint is free. I don't know why people have gone away from Mint. You have to like get around all the advertisements and all the promotions, but just, click those boxes and say no thanks every time, right? Continue to build your strong trading psychology and investing psychology to reject all of those credit card offers that are in there. But I still love using Mint because it categorizes everything. I can see all of my accounts in one place. I can add real estate. I can, remove real estate. I can do everything from one place. A lot of people use Personal Capital. I've started to use it a little bit, just kind of testing it out. I'm still not there yet. I still use Mint for everything. But still, the biggest thing that I use is just a spreadsheet. So I have like a master spreadsheet for all of our real estate. I have a master spreadsheet for our budget, for our family, for all of our accounts and our wealth and our projections of what we're going to owe in taxes and all of that stuff moving forward. So I keep just a very simple spreadsheet, and I've still found that to be the most effective. So if you haven't yet, I'm sure there's a bunch of templates out there you can use. You can download a bunch of free templates out there online, and there's definitely some going around the community inside of the forum which you can grab as well. But to me, that's really it. I mean, I don't think there's that much that you need to do. The more complex you make it, actually probably the more difficult it becomes. So try to keep it very simple, try to keep it very easy, very scalable, and I think ultimately it will serve you well. Now, remember that this podcast is, of course, sponsored by our number one ranked platform over at Option Alpha. And again, I wanted to give a quick shout out and thank you to one of our members who wrote a recent review for us over on iTunes. And that thank you is for Michael Parrish, who recently said this. He said, "By far the best podcast I've found for options trading. I just finished listening to all of them. Kirk has made the podcast very easy to listen to without having to sit down and get out the calculator and graph paper. I learned more from these podcasts in a couple days than I had from all of my previous sources put together. Thanks, Kirk." And thank you, Michael. I appreciate it. And again, if you wanted to give us a rating and a review, we would absolutely love it. It's one of the ways that we help grow and kind of get the word out about what we're doing here at Option Alpha. So you can just head on over to iTunes or Google Play or wherever you listen to the podcast and leave us a rating and a review. So let's get into the Trader Q&A segment.
And now our favorite part of the show, Trader Q&A, where we ask a question from one of our current members about options trading. Got a question you'd like to ask Kirk to answer live on the air? Just head on over to optionalpha.com/ask and hit the record button to leave a message. That's optionalpha.com/ask. And now, here's today's question.
Hey, Kirk. This is Matt from Connecticut. I'm a new member. I've been trading options for about 45 days. I had a question about the pricing of spread options. I know each brokerage is different. I don't have the capacity right now in my account because I don't have the correct level authorization, which I'm trying to get now. I had a question about the pricing of spread options. When you place an iron condor trade, for example, I've watched you do this on Thinkorswim. I see you set it up as two vertical spreads, and it recognizes that it's an iron condor. My question is, when you go to submit the trade order, are they charging you for 4 legs, 2 legs, or a single option price? And conversely, when you go to close the position, if you don't let it go to expiration, are you charged 4 legs? Are you charged 2 legs? Or charged 1 trade? Thanks so much for everything you do. I appreciate it.
All right. So thanks, Matt, so much for submitting the question today. And so when it comes to entering multi-leg orders, and I'll just use the term multi-leg orders for iron butterflies, iron condors, any of that stuff, it does depend a little bit on the broker. What most brokers do is they charge you either a per contract fee and or a per contract and order fee, or a basically ticket charge. So what some brokers might do is they might say, okay, it's going to be, $5 every time you trade plus 10 cents per contract. Or other brokers might say, okay, we're not going to do the $5 charge. We're just going to do the 10 cents per option contract or per leg that you do. So in our case with Thinkorswim, what we do right now is just have no ticket charge. It's just on a per contract basis. We pay 75 cents per contract. So it doesn't matter how the order goes in or how it comes out. It's just totaled up with the number of legs and the number of contracts that we have. So if we have 4 legs, we multiply everything by the 4 legs. If we have 2 legs, 3 legs, it doesn't really matter. And again, that's on opening and closing. So you just want to double check with your broker because a lot of them are a little bit different. We try to get everyone on a per contract basis. I think it's the most sensible thing to do moving forward, and it's definitely the most scalable until all of these brokers basically go to zero for all of their commissions.
Now, the closing bell. Find out which stocks we're looking at right now, trades we're making, and hear our game plan moving forward.
All right, so in today's closing bell segment, I want to talk about a new trade that we got into in OIH. So OIH is a ETF that tracks the oil sector in general. And OIH in the oil sector, if you haven't been living under a rock, realize that has been having a really, really tough time, and it's been down basically bear market territory. So OIH was up around 29 and some change, around 30 or so, is recently traded down to around 16 as the recent low. But generally, what we see in OIH is something that's overextended to the downside. We need to see some cyclicality in the oil market. We don't know when that's going to come, but it looks like it's kind of due and ripe for some cyclicality. And as a result of the decline in oil and ETFs like OIH, we've seen a really strong run-up in implied volatility. Particularly in OIH, implied volatility has risen up to around the 97th rank. So it's about as high implied volatility as we've seen in OIH in the last year and a half. So at this time, what we're going to be doing is entering a short straddle at the 17 strike price. This is a little bit bullish based on tilt, just slightly based on where OIH is trading right now. It's trading just under 17. But again, the idea here is we're taking a little bit more of an aggressive approach to option selling, given that implied volatility is so high. And so what we want to do is in times where implied volatility is low, we want to be a little bit more conservative. When implied volatility is high, we want to be slightly more aggressive and use option strategies that sell more pure implied volatility, more pure option selling. So that's why we're doing the straddle. We're selling the 17 call, selling the 17 put, collecting $1.95 in premium. It's also decent to do these types of undefined risk trades in lower priced ETFs like this because it doesn't carry as much margin. Now, we still want to keep our position size small. So this is the first of a couple planned laddered entries in OIH, which means that we're only doing 2 contracts here to start. So we're not going to overextend ourselves. We know OIH is going to move. Implied volatility has been high. It's high because the stock is going to move. So we don't want to assume that it's just going to trade here around 17 for the rest of the expiration period for the next 43 days. But this is our first entry. This is the first one that we're kind of dipping our toe into here, and we'll continue to sell positions all around OIH as it moves through the expiration cycle.
Thanks for listening to the Option Alpha podcast. If you liked what you heard, please drop by iTunes and leave a rating or comment. Plus, you can get everything: free email updates for future shows, transcripts, video tutorials, case studies, and more. Just visit our website at optionalpha.com.
All right, so as always, I hope you guys enjoyed today's show and got at least one thing out of it that you can apply right now to make you a smarter, more profitable trader and investor. As always, you can get additional resources, links mentioned in the show, and some related video training from today's show by going to optionalpha.com/show150. Again, that's just the number 150, optionalpha.com/show150. Until next time, happy trading.